Imagine stepping into September 2025 with a portfolio built on the fastest-growing AI stocks, while everyone else is still chasing yesterday's winners. The truth is, most investors will completely miss what's about to happen, and skipping this video could cost you thousands in missed gain. But if you stay with me until the end, you'll walk away knowing exactly which 7 companies are leading the next wave of artificial intelligence. Names that are not only delivering revenue growth right now, but also locking in partnerships, contracts, and innovations that Wall Street hasn't fully priced in yet. This is your chance to get ahead of the crowd, not after the news breaks, but before the momentum explodes. And before we dive in, let's set a small challenge. If we can hit 500 likes on this video, I'll drop a follow-up breakdown on hidden AI gems for October that could be even bigger. Now, let's get straight into the first stock, because this list is packed with opportunities you don't want to miss. Number 7. CoreWeave. CoreWeave. CoreWeave may be the newest name on this list, but its financial momentum has already caught Wall Street's attention. After its IPO in March 2025, CoreWeave surprised analysts with early revenue acceleration, driven by demand for GPU-based cloud services. Though quarterly earnings are still in the early stages, estimates suggest the company is running annualized revenue well into the billions, supported by high-margin AI workload. Analysts expect the company to narrow losses quickly as utilization grows, and its balance sheet is backed by strong venture capital partners, giving it enough cash to scale aggressively. In its first quarterly report as a public company, CoreWeave beat consensus on revenue, reflecting strong demand from AI developers. Guidance for the rest of 2025 indicated double-digit sequential growth, and analysts from major firms like Morgan Stanley highlighted it as a pure-play AI infrastructure bet. Investors are watching closely to see if it can maintain this pace, but early signs are promising. The big headline this year was CoreWeave's multi-billion-dollar partnership with OpenAI. The company secured a $12 billion deal to provide specialized cloud compute infrastructure, making it one of the largest AI-dedicated partnerships on record. Beyond OpenAI, CoreWeave has announced collaborations with top enterprises and research institutions, highlighting its ability to serve diverse AI clients. So how does CoreWeave actually work? Unlike general cloud providers like Amazon or Microsoft, CoreWeave is purpose-built for AI. It offers compute clusters with NVIDIA's most advanced GPUs, optimized for training large language models and running generative AI workloads. Its niche focus allows customers to deploy at lower latency and higher efficiency than they might find in a general cloud. Among its unique strengths is being first to deploy NVIDIA's Blackwell Ultra GPUs at scale. That positions it as an early mover in the next wave of AI hardware, capturing clients who want immediate access to cutting-edge compute. For investors, this means CoreWeave is not just a cloud company. It's the backbone of some of the most powerful AI systems in the world. With its IPO buzz, landmark OpenAI contract, and aggressive scaling, CoreWeave stands out as a bold growth play for September. Yes, it's a younger company with risks tied to execution, but the upside potential is enormous. If you think CoreWeave is impressive as a new entrant, wait until you see stock number 6, which is reinventing how warehouses and supply chains operate. With AI number 6, Symbotic. Symbotic has been making headlines with its rapid growth in revenue and backlog, and its financials are starting to reflect the scale of opportunity in AI-powered logistics. In its latest quarterly report, Symbotic posted revenue of over $450 million, a jump of more than 40% year over year, while narrowing losses. Profitability remains in sight, with margins improving as deployments ramp up. What really grabs investor attention, though, is the $23 billion backlog of contracts, evidence that demand for its systems is not only real, but accelerating. Analysts cheered the company's results earlier this year, noting that its revenue growth outpaced expectations, and guidance looked robust. The market rewarded Symbotic with a higher valuation, though many still see it as undervalued given its order book. While volatility remains, consensus points to sustained growth, through 2025 and beyond. Recent news has been dominated by partnerships with Walmart and other retail giants. Walmart has been rolling out Symbotic's AI-driven warehouse automation systems across dozens of distribution centers, and that alone is a multi-billion-dollar commitment. Beyond Walmart, Symbotic has been expanding into other retail and wholesale channels, signing contracts that diversify its customer base. So what exactly does Symbotic do? It designs and deploys robotic systems that automate warehouse logistics. Its AI-powered robots handle the sorting, packing, and movement of goods with speed and accuracy far beyond human capability. By combining robotics with AI optimization, Symbotic dramatically reduces costs and errors in the supply chain. Among its standout features are modular robotics that can be adapted to different warehouse setups, software that learns and improves efficiency over time, and the ability to scale operations quickly. This positions Symbotic as a game changer for industries that depend on fast, accurate distribution. For September 2025, Symbotic shines as an AI play outside the usual chip and software names. It offers exposure to the physical side of AI adoption, where algorithms meet real-world operations. With a growing backlog and expanding partnerships, it's a stock that could see significant upside as automation demand accelerates. And if you're excited by robotics transforming warehouses, wait until you see stock number 5, which dominates the semiconductor world with explosive AI revenue. Number 5. Broadcom, AVgo. Broadcom is already a tech giant, but its role in AI is becoming too big to ignore. Financially, Broadcom continues to post stellar results. For fiscal 2025, analysts project AI revenue at $19.5 billion, up nearly 60% from the prior year, with expectations to hit $26.7 billion in fiscal 2026. Net income margins remain strong, and Broadcom's diversified business model ensures that it's not just dependent on one segment. The company pays a dividend, giving investors both growth and income, and maintains a healthy balance sheet with manageable debt. In its recent quarterly report, Broadcom beat earnings expectations and raised guidance, citing stronger than anticipated AI demand. Analysts across Wall Street have praised its consistent execution, noting that while NVIDIA often takes the spotlight, Broadcom quietly benefits from the same AI boom with less volatility. Recent news includes expansions in its custom silicon business for hyperscalers and rising demand for its networking products that power AI data centers. By selling both semiconductors and networking gear, Broadcom positions itself as a one-stop shop for the infrastructure behind AI workloads. So, how does Broadcom make its money? The company is a diversified semiconductor powerhouse with products spanning networking, storage, broadband, and AI accelerators. It provides the chips that enable data to move faster, systems to compute smarter, and enterprises to connect globally. Its strengths in AI include custom accelerators for cloud providers and high-speed networking chips that allow massive AI models to train efficiently. As AI models grow larger, Broadcom's networking solutions are in greater demand, creating a durable growth engine. For September 2025, Broadcom stands out as a stable yet fast-growing AI play. It may not grab headlines like smaller disruptors, but its combination of scale, profitability, and dividends make it attractive for both conservative and growth-oriented investors. Stock number 4, however, is not about stability. It's a Chinese powerhouse doubling profits and shaking up the AI chip market. Number 4, Cambricon Technologies. Cambricon is one of the most exciting international AI chip stories of 2025. Financially, the company shocked markets earlier this year when it reported RMB 1 billion in profit for the first half of 2025, reversing prior losses and posting revenue growth that sent its stock price soaring. Shares doubled within a month of the announcement, showing just how hungry investors are for China's AI champions. Quarterly performance has been strong, with Cambricon's not only meeting but exceeding revenue expectations. Its guidance points to continued growth, supported by Beijing's push to reduce reliance on foreign chips. Analysts have begun to upgrade the stock, highlighting its profitability milestone as a turning point. In terms of news, Cambricon has benefited from Chinese government contracts and partnerships with domestic cloud providers. It has also been linked to collaborations with major Chinese tech firms, embedding its AI accelerators into a wide range of products and services. So, what's Cambricon's role in the industry? It designs AI chips and accelerators that power machine learning and inference workloads. Similar to NVIDIA in the US, Cambricon provides the silicon backbone for AI development in China. Its chips are found in data centers, edge devices, and enterprise applications. One of its unique advantages is its close alignment with government policy. As China prioritizes technological self-sufficiency, Cambricon is positioned as a national champion, benefiting from subsidies, contracts, and a favorable regulatory environment. For September 2025, Cambricon represents a high-risk, high-reward play. It's not as globally diversified as U.S. peers, but for investors willing to take on geopolitical risk, its growth trajectory is compelling. But if Cambricon shows the rise of Chinese AI, stock number 3 is all about the explosive growth of digital advertising powered by AI in the U.S. Number 3, AppLovin. APP. AppLovin has quietly become one of the fastest-growing AI-driven companies in digital advertising. Financially, the numbers are eye-popping. Over the last 3 quarters, AppLovin averaged 185% earnings growth, with revenue climbing sharply. Its balance sheet shows healthy cash flows, giving it the ability to invest in growth while maintaining flexibility. Analysts expect continued earnings expansion, supported by strong demand for its marketing tools. In quarterly reports, AppLovin has consistently beaten expectations. Its most recent guidance was equally strong, suggesting that momentum is not slowing down. Analysts have pointed out that its valuation still leaves room for upside, especially given the scale of its growth. News this year has focused on new AI tools within its marketing platform, helping developers better target users and monetize apps. These tools have been adopted rapidly across the mobile ecosystem, giving AppLovin a competitive edge. So, how does the company make money? AppLovin provides developers with AI-powered solutions for app discovery, marketing, and monetization. It connects app creators with the right audiences, optimizing ad spend and boosting downloads. Among its strengths are proprietary algorithms that learn from billions of data points, improving the efficiency of ad targeting. This allows developers to scale their apps quickly while maximizing revenue. For September 2025, AppLovin represents the intersection of AI and advertising, a sector with massive growth potential. It's a story of technology driving real financial results, making it one of the most compelling growth plays this month. If you thought ad tech was fast-growing, stock number 2 takes us back to the enterprise world, where AI is quietly transforming how work gets done. Number 2, UiPath. UiPath has become synonymous with robotic process automation, and in 2025, it's taking automation to the next level with AI. Financially, UiPath has been growing revenue steadily, with its latest quarterly report showing double-digit year-over-year growth. While profitability is still emerging, the company has been narrowing losses and building a solid cash position. Its balance sheet remains strong, giving it runway to scale further. Quarterly reports have generally met or exceeded expectations, with guidance showing confidence in enterprise demand. Analysts remain optimistic, pointing to UiPath's ability to upsell existing clients and expand into new verticals. The company has also been recognized as a leader in Gartner's RPA Magic Quadrant, reaffirming its market position. Recent news has centered on the launch of UiPath's agentic automation platform, a suite of tools that combine RPA with generative AI to enable more intelligent workflows. This new platform has been highlighted in enterprise tech circles as a breakthrough, giving UiPath a clear edge in the next wave of automation. So, what's the business model? UiPath sells software subscriptions that allow companies to automate repetitive tasks. By layering AI on top of these processes, it creates systems that can learn, adapt, and even make decisions, Key features include pre-built automation templates, AI-driven process discovery, and deep integration with enterprise software. This makes it easier for companies to deploy automation at scale without heavy development work. For September 2025, UiPath shines as a growth stock with real adoption. Enterprises are hungry for productivity gains, and UiPath is delivering them. It's not hype, it's practical AI, saving companies money and time. And finally, stock number 1 may be the purest data-driven AI play on this entire list. Number 1, Snowflake. Snowflake is a data powerhouse, and in 2025, it's making bold moves into AI. Financially, Snowflake has consistently grown revenue at a double-digit pace, with its latest quarter coming in above $900 million, up year over year. While the company has historically run at a loss, margins are improving and free cash flow remains positive. Analysts point out its strong cash reserves, which give it flexibility to invest aggressively. Quarterly results this year have generally beaten expectations, with management raising guidance in key areas. Analysts at major banks continue to rate Snowflake as a buy, citing its position at the center of enterprise AI adoption. The biggest news of 2025 has been Snowflake's expansion into AI services. At Snowflake Summit 2025, the company announced a series of tools enabling customers to build and deploy AI models directly within the Snowflake Data Cloud. This positions it as more than just a data warehouse. It's becoming an end-to-end AI platform.